Good morning, everybody. Catherine Bagshaw, as we've heard, I am a technical manager with ICAEW. I have been Mrs. ICES with ICAEW for 14 years now, and I've really done very little else. I'm not a practitioner. I say that first of all. It's a long time since I've actually done an audit, but I work very closely with ICAEW practitioners. I am secretary to ICAEW's ISA implementation subgroup, and we've implemented ISAs in 2005, and we've just implemented clarified ISAs in 2010. This is my fourth time in Singapore. I'm delighted to be here. I'm here with my colleague David Chitty. You'll see from the screen he is International Accounting and Audit Director with Crowe Horwath. He is also a council member of ICAEW, and he's past president of our Thames Valley Society. Croydon, I beg your pardon, Croydon. But this morning we're going to talk about ISQC1, which is being implemented in Singapore. This we would like to be an interactive session. If you would like to ask questions, simply put your hand up and stop us. We're very happy for you to do that. And David and I are going to split this between us. I am going to talk about the quality assurance framework. Quality control and audit quality are not just about what practitioners do. It's a broader issue. Quality control, quality assurance, and audit quality are also about the inputs to the profession, the quality of the people coming into the profession. If you get good people coming into the profession, you are going to conduct better quality audits than if that is not the case. Regulator behaviour is another important aspect of quality. If regulators take a rigid compliance approach, that is the way practitioners will behave. And one of the things that we do in the UK is work very closely with our regulator. And we had to work quite hard at that to begin with, because they didn't want to work closely with us. But we persuaded them to work closely with us so that we can all work to the same goal. Because in the end, the regulator, the profession, the practitioner, we all want the same result. So I'll talk about that. Then David will talk about ISQC1, quality at the firm level. I will talk about ISA 220, quality at the engagement level, and we'll also have a talk about the UK regulators' findings, our Quality Assurance Directorate, and what they find our practitioners do, because I believe it's much the same as what practitioners do here and elsewhere in the world. Many of the problems are common. The importance of this was highlighted on Monday when a representative of ACRA specifically pointed out the importance to them of instilling a culture of audit quality. And we have exactly the same issues. We need practitioners to genuinely believe that quality is worthwhile, it's achievable, and to do the work to put it into place. Otherwise, people simply go through the motions. Okay, so the framework. Just a quick summary of this. I'm going to talk about why quality is important to you, the practitioners. I'm going to, and then the profession and to regulators. I'm going to talk about the regulation of quality. Quality is no longer optional. It's required. It's required by lots of different organisations. Here in Asia, in the EC, the UK and IFAC, and I'm going to talk about ICAEW's approach to audit quality. We believe we have a good approach to audit quality, and we're very happy to share you with it. We're also happy to and interested to learn what issues that you have here in Singapore with this subject. So, first of all, so that's that. Important to practitioners. Why should you pay attention to ISQC1 and ISA 220, or indeed any other auditing standard? Audit quality is an odd subject. You can tell a quality car when you see it or by the way it drives, or a quality biscuit by the way it looks and the way it tastes. But audit quality is opaque. You have to do something to find out what it looks like. You have to review a file. And even then, there can be differences of opinion as to whether a file is good audit quality or whether it's not. And you may be aware that in the UK and at IFAC, there are a number of different projects on what is meant by audit quality. And they're very broad, and this is the framework issue, and they recognise that it's not just what's on the file, it's whether or not the audit report is right. And it's also about the quality of entrance into the profession. It's about methodologies that firms use. So if a firm has a poor quality methodology, it's less likely to do a quality audit. Now, having said that, if you have a rubbish auditor, it's going to make a mess of an audit regardless of the quality of the methodology. And if you have a good auditor, they will manage despite a poor methodology. But most of the time, we're looking at average auditors who will probably do a better audit if they have a better quality methodology. But in the end, it's the first item, the principal thing that concerns most practitioners before anything else is the hygiene factor. You want to do well in regulatory inspections. You want the inspector to go away and say, yes, tick, that's fine, on to the next thing. Firms taking a pride in their work do want to maintain auditing standards. They do want to improve audit quality. But it's the next two items here. It's promoting efficient audits and practice management and staff development here. In my work with the ISA implementation group in the UK, it's a big group. We started it in 2003. We have some 15, 20 practitioners on that group from firms of all sizes. We have the big four, we also have the mid-tier, we also have smaller firms. We have other CCA bodies. We have the Scots and the Irish on that, and we also have the regulator who comes along to that. And we decided very early on that one of the key messages with ISAs, and particularly with audit quality, is that it is not separate from practice management. It's not different to efficiency and profitability. They're not mutually exclusive. Those objectives, efficiency, profitability and quality, all in the long run have to be aligned. They're not pulling against each other. Now, in the short term, there are tensions, because if you want to make a quick profit, one way to do it is to cut corners on audit quality. But ultimately, that is destructive to the auditor-client relationship, to the firm as a whole, and ultimately to the profession as a whole. And we have to take the long view here, or that's what we encourage, and that's what we encourage. And we believe that our practitioners have taken that message on board as well, somewhat reluctantly in some cases, but it has to be right, and we have to make it right, otherwise it's in nobody's interest in doing it. Quality is increasingly important as a marketing tool. I'll stand to be corrected on this, but I don't believe that 10 or 15 years ago there were that many brochures that audit firms produced that advertised the quality of audits. Now they do. And one of the reasons they do is because firms in the UK and elsewhere are now required to produce transparency reports. They may be limited liability partnerships that are not required to file accounts statutorily, but there are all sorts of bits of legislation and regulation that say you firms, and particularly the larger firms and the mid-tier firms with listed company audits, you really should be producing some financial information and some information about how the firm works, because you are a very large organisation. And other large organisations have to do this, so should you. The sort of corporate governance requirements that apply to large companies should apply to some extent to large firms, even if their legal structure is different. And the requirements within, the transparency requirements include requirements to talk about the firm's policies, procedures and processes for audit quality, and not just what they do, but what the results of the review was and the deficiencies that they find. Now, I know the regulators would like the firms to report their own deficiencies rather more fully than they do now, but that's exactly the same is true of companies who don't report their internal control deficiencies quite as fully as a regulator might hope. But we've certainly seen a very strong move in that direction over the last 10 or 15 years. Okay, whether we like it or not, quality is important. It's important to the profession as a whole and to regulators for fairly obvious reasons. I would highlight on this slide the growing challenge to the profession from regulators such as ICPAS. The ICPAS is the the International Federation of Independent Audit Regulators. It is a grouping of regulators, and I am not sure, and I'm sure somebody will tell me, if ICPAS, ACRA is part of it. ACRA is part of ICPAS, as is our UK regulators. And they are saying to the profession, long gone are the days where we can trust you. You have to prove that quality is improving. And that's true of all the professions. It's not just the accountancy profession. And they are challenging the profession to A, prove that they are doing quality audits, but also to raise the bar. That's the title of our session this morning. How do we improve audit quality from a baseline? We've already mentioned the growing importance of audit firm transparency. Now, I mentioned the fact that the UK standard was a basis for the ISA. I suspect that the UK has had a quality control standard in probably longer than almost anyone else. We've had one in place for at least 15 years. It's relatively new in a lot of other jurisdictions, but we were very happy. We were very proud when ICAEW took the UK standard and adapted it. Not greatly. It's very recognisable as the UK standard that was there quite a long time ago. It's obviously developed considerably since then, but it is basically the UK standard, and we're proud of that. Now, before I go on to regulation, I did want to sidetrack just briefly and talk about audit automation. I don't have a slide on this. It's something that's come up fairly recently. At ICAEW, although we don't have any official policy on it, we are becoming increasingly sceptical that it's possible to do a quality audit without audit automation, without some sort of software, without some sort of electronic methodology. It's basically, we're saying we don't see that many good paper-based audits that are just done on paper anymore. And the reason for that is because of the Book of Auditing Standards. This is the UK Book of Auditing Standards. It's about 1,000 pages long. It's very similar to the length of the IFAC Book of Auditing Standards. Now, when I and a number of other of you in here did your training, this book was a fraction of that size. When I did my training, there were 2 auditing standards and 5 auditing guidelines. David will remember this because he did his training at the same time, and possibly one or two of you who did your training in the UK a long time ago. Now, we knew our auditing standards in those days. We had no open book exams. We could repeat what was in there verbatim. This is no longer possible. There are complicated linkages between the various auditing standards, and whilst none of it is rocket science, it's not that hard. There is quite a lot of it these days, and if you don't have some sort of audit automation, you are going to miss things out. For that reason, we in the UK have talked to the commercial providers of software and training right from the start and said, we need to talk to you because if your software isn't very good, our audits aren't going to be very good. And we don't regulate the software providers in the UK, but they do bear a huge responsibility for audit quality. So we have to be quite nice to them because we want them to come and talk to us, because we want to tell them what the problems are and what they need to do to their packages to improve them, because we deal with the results when things go wrong. And I'd be interested to hear how that works out in here in Singapore. Allied to that is an issue about how much you as qualified practitioners need to know in detail of what is actually in there. Of the Singapore auditing standards, which I understand are very similar to international standards, which are very similar to UK standards, which is all good, I haven't read every word in this book, and I am a technical person that only deals with ICEs. You have real jobs. Is there anybody in here who has ever read, if you put your hand up if you've read every word in this book? All right. Put your hand up if you've read 50% of the words in this book. Okay, maybe at one time over a long period of time. And it's genuinely different from what it was 20 years ago, because 20 years ago I had read every word in this book because it was very, very much shorter. Now the question that comes up in the general context of ICEs is, I am a partner, I qualified 35 years ago. It's changed a lot. How much of that am I actually expected to have read and understood? How much can I rely on my own firm methodology? Well, the truth is that most firms do rely very heavily on their methodology. This is why quality of methodology is so important for ICEs generally, not just quality control. But there are some fundamental ICEs which in my, and this is my personal opinion, and it's when I talk to practitioners, partners in the ICE group, there are a few ICEs that if we qualified 15, 20, 30 years ago, we probably ought to read them. We probably ought to read a few of them, and they are the risk ICEs, ISA 315 and 330, because they're so very different to what they used to be. There is the ISA 600, the group audit standard, because it's changed such a lot recently, and incidentally, I did have the pleasure of speaking to this group last year on that subject. The related parties standard, because again, it's been revised recently and it takes a very much more robust, shall we say, approach to the questioning of audit clients, and the fraud standard, ISA 240. So risk groups, related parties and fraud. And that is my personal suggestion. If you're a partner who qualified 25, 30 years ago, it would be useful to spend a little bit of time reading those. I don't know whether David would agree with me. He will tell us. Right. I'll move on to regulation in Asia. Here in Singapore we have an established oversight board. They register auditors of public interest entities, often under securities legislation, and they are almost universally required to comply with ISQC1. They pay particular attention to ISQC1 and comment publicly on common weaknesses. Auditors are also required to comply with ISQC1 under professional body rules. I'm sure there is a rule somewhere in ICPAS's book that says you must comply with standards, whatever they happen to be. Elsewhere, if you are a European auditor, our statutory audit directives say you must comply, not comply with ICEs, but it covers quality control. We have the Professional Oversight Board on our Audit Inspection Unit. Same thing, monitoring large firms, most public interest entities. All auditors, whether they're public interest auditors or smaller firms, are controlled by our recognised supervisory bodies. The POB, the AIU and RSBs, it's that last item there, all of them look for quality assurance. And then IFAC, the International Federation of Accountants, SMO is the Statement of Membership Obligations. ICPAS and ICAEW are both members of the International Federation of Accountants, and Statement of Member Obligations number 1 says you must implement systems compliant with ISQC1 and ISA 220. So it just comes at you from every possible quarter. We can't avoid this. Okay. I mentioned before that we are quite, we believe we are innovative in our approach to the regulation of quality assurance. And indeed ISAs generally. And I just wanted to share with you briefly how our Quality Assurance Directorate goes about monitoring its firms. Now, I am aware from having been in this region last year, I don't know about ACRA because I didn't meet them last year, although we do have communications with them. I saw the Vietnamese regulator and I saw the Malaysian regulator last year. It'll be different here. But our approach, we try and take a positive, cooperative approach to this. Now, a regulator's instincts are to regulate. And it's understandable because that's what the public, it's what the profession, politicians expect to a certain extent. If auditors do something wrong, you must punish them. But in real life, you know, we can't jail all of our auditors. We can't strike all of our auditors off. What we want our auditors to do is better quality audits. It's the same with policemen and speeding cameras. A lot of policemen genuinely believe it's their job to catch people who drive too fast. The more enlightened among them say, no, the job is not to catch people and punish them. The job is to slow the traffic down. The job is to make sure that there are less deaths on the road. And it's the same with audit. The object of the exercise is to improve the quality of audits, not to punish auditors. Okay, I'll come back to that. Right. Our Quality Assurance Directorate combines a cyclical and risk-based approach. Most audit firms, unless they have public interest entity clients, have a visit every 6 years. It's 3 years for listed entity auditors or auditors with a poor history. And the top 20 firms get a visit every year. Now, 6 years is a very long time between visits. A lot can happen to a firm in 6 years. And slowly but surely, they're doing more to fill that gap. They don't have more resources. What they are doing is using their resources more efficiently. So they're doing more telephone visits. They're doing more paper-based visits. Send us some of your files. There are a number of new, they do webinars now for auditors and give people credit for attending webinars. They now run courses. Now, I don't think ACRA runs courses, but I think our QAD is amongst the first. But it's saying we are responsible for ensuring that the quality of audits in the UK is good. We are going to help those practitioners that are not doing it by providing them with some very specialised, some very focused tuition. Now, it is not compulsory, however, if firms choose not to go on a course that they've been advised to go on, that is obviously going to be taken into account when the inspection is next conducted. And firms are charged for it as well. They don't get this training free. Anyway. We have 40-odd reviewers. They are independent of the audit firms. Obviously, most of them have qualified with firms, but they are employed by the ICAEW. They are a genuinely high quality team. There's a lot of grey hair in there, and I gather that's important, because I know that some regulators in this part of the world, and it's not just in this part of the world, have trouble getting good quality people to do the regulation, partly because they can't afford to do it, but we do find all over the world, and the PCAOB in the US is the same. The best sort of people are the people who are close to retirement. They don't need to earn a huge amount of money anymore, but they still want to work, and they have a lot of experience to offer. So when you get to that stage, go talk to your regulator. You obviously can't review a firm that you used to work for, and our QAD makes an annual report to the Public Oversight Board. Everybody is broad. I say that I should touch wood and cross my fingers when I say this. In the UK at the moment, people are broadly happy with the way ICAEW conducts its inspections of smaller company auditors. One aspect of that is that they are constantly changing. Every year they do something different. They publish a report on what they do, and they're constantly looking for new ways to help auditors. But one thing I should note in this context, and that's the infrastructure behind it. They do have an effective suite of sanctions which they use. They can caution auditors. They can say, if you don't do this and prove to us that you've done that, we will take further action. Auditors can be fined, and ultimately auditors can be struck off, and they are struck off. If you read Accountancy Magazine, or Economia as it's now called, there is a list of firms in there every month that is no longer permitted to audit. And that is right and proper, and there have to be sanctions, and they have to be applied in order for the regulator to be credible. They obviously have to be adequately resourced, and there has to be a belief that what they're doing is right. Now, when we introduced audit regulation in the UK some 15 years ago now, in the mid-1990s, firms were very sceptical. They thought this was just more cost. It was a way of beating auditors, and it wasn't going to do anybody any good at all. That is no longer the common view among smaller firms. The common view among smaller firms now is that it's a good thing, but because it keeps the cowboys out. It means the really poor quality auditors who will do audits really cheap won't stay there for very long, which means that the people who remain within the pool can keep standards up and can keep fees up as well. It's had a positive effect. Most of our small practitioners, including the difficult small practitioners, now believe that this is and they wouldn't do away with it if they had the opportunity, which I think says a lot. When the regulated believe in the regulation, that's some success. The monitoring philosophy, I've mentioned this, it is non-adversarial. It emphasises support. The focus is on sustainable improvement. If we're asking a firm to do something, we don't want it to do it once this year just so that when the inspector next comes in it looks as if they're doing it. We want them to do it, carry on doing it. We want them to see that it's in their interest to do it. Support and guidance are paramount. Help sheets, helplines, newsletters, alerts and blogs are provided throughout ICAEW. The faculty that I work for, the Audit and Assurance faculty, produces this stuff. Our Technical Advisory Service produces this stuff, and our Quality Assurance Directorate provides this stuff. And you've got some of this stuff in your packs. I'll just draw your attention to one or two of these things. You've got this beautiful publication here on related parties. I think it's beautiful. It's mine. Do you like our fish? They're angel fish. It's on related parties. We have a UK version and an international version, and they all have animals on them, and they're all related because they look similar. I wanted seahorses, but seahorses were too expensive according to our branding. Anyway, you spend a lot of time looking at this stuff. It gets into your subconscious. Anyway, Right, so we've got a UK version of this. This is the international version. It's only just been published. It costs £20. You're getting it free because I've come here and said, please, can I take a load of copies to Singapore, please, with me. So you're getting this free. Everybody else has to pay £20 for it, unless you're a member of the Audit and Assurance faculty. How did we go about internationalising this? If you look at the list of credits on the back page, on page 24, you will see a list of contributors to the international edition. We have an increasing number of contacts all over the world, and I simply sent the UK publication to as many people I could think of who I thought might think this publication is valuable, and asked them if they had any comments on the UK version. And we did put quite a substantial number of amendments to the UK version into this international version. Now, that's not because there is a huge difference between the UK standard and the international standard. There is virtually no difference between the UK standard and the international standard, but it's the subject matter. This subject matter is quite difficult in some cultures. You'll see with those contributors, we had quite a lot from the Middle East. The ISA on related parties effectively asks you to ask the Arab sheikh how many companies his 14 wives control, and is this disclosed in the accounts? Now, that's a tall order for a firm in the Far East. With that, that is asking a lot, for which reason we talk to people in Bahrain, because they have to do this sort of thing. And they are quite skillful about this. They say one way you do this is you don't do what you do in the UK, which is to go and get a junior person to ask this. We can do it in the UK because people are used to this sort of thing. They might not like it very much, but they are quite used to it. In the Middle East, you have to be, and in other parts of the world, you have to be more sensitive. So you send the engagement partner or a much more senior person. And there are certain ways of asking these questions. I learnt a lot of very interesting things talking to people in different parts of the world with this. I would be delighted to have some contacts in Singapore, because we will be doing this exercise on a number of our other publications to try and make them work in an international context. So perhaps I'll talk to ICPAS and see if we can find some contacts here for similar publications in the future. So I would be very happy to receive any comments on that. We'll give you my email address at the end of it. We're always looking to improve these things. Some of you may have come across this publication, seen this publication, right first time with the clarified ISAs. We produced this some time ago. It's a series of 10 modules on the more difficult clarified ISAs. Now, I'm having to open this, it's 2 years since. Materiality, management override of controls, documenting significant professional judgments. Understanding and documenting internal control in smaller audits, quite a difficult one. External confirmations, written representations. Again, it's an international edition. This is on our website. You get it free if you're a member of the Audit and Assurance faculty. Now, I'm showing you all of this. The one publication that should be here that isn't, for which I apologise, is our publication on quality control. We have a publication, an international edition of a publication on quality control. You do not have to be a member of the Audit and Assurance faculty. It's free. And we've got the website link somewhere in the material. Do go and download that when you've got a moment, when you've got back to your offices. But these 3 sets of publications are specifically designed for international audits. So this is by way of explaining what sort of material we produce. Now, this link here is a video we've produced. This is the DVD that you've got. And again, these are hot off the press. We've only just produced these. Our Professional Oversight Board, like regulators everywhere, they all tend to copy what each other say. It says, professional scepticism. Auditors aren't sufficiently sceptical. What are you going to do about it, oh audit profession? And there's a lot of working parties and groups, nationally and internationally. So what do we mean by scepticism? Do firms knock natural scepticism out of their own employees? Do they enhance it? There's some interesting work being done on this. We're fortunate in the UK to have John Kellis, who was a partner with KPMG. He was also the chair of the IAASB during that long period when it produced the clarified ICEs. He appears on this DVD, as does Martin Jones, the Vice President of the Institute. We hope you find this interesting and of value. Again, this is open to everyone because it's if you like, it's a public interest issue, and we want people to see this. So, again, your thoughts on that would be welcome. The result of all of this, we believe, is a certain amount of trust in the process, openness by practitioners about the problems that they're having with the regulator, transparency, people know what the problems are, they're not afraid to admit what the problems are, and efficiency. Our Public Oversight Board has some confidence in the process, and perhaps more importantly than anything else, we do get positive feedback from the firms themselves. The firms believe in quality and regulation. And then finally, before I hand over to David, just a little bit more about how our regulator does this. Risk assessment is becoming a more important part of the way our Quality Assurance Directorate manages its approach to visits. Every year each firm has to send back an annual return. It says something about the firm structure. How many partners, how many staff, how many offices, what the legal structure is, how much professional indemnity insurance it carries. Apparently that's quite a good indicator of quality. Poorer quality firms carry a lower amount of that. Their previous history, and in the end it is a judgment. Who do we think is a potential problem here? And the key factors they look at in a firm are things like peer reviews. Does the firm get its own files reviewed by another firm or by a training organisation? I'll emphasise this. Back. It's in-house CPD training and support, the technical and soft skills. We no longer, you may know, we no longer have an hours-based CPD system. We no longer say you have to have completed 120 hours CPD every year. We say you have to have thought about what your training need is, and you need to have done something about it. That's still quite unusual, but it does mean that you can't go to 4 or 5 courses a year and go to sleep in the front row or the back row or whatever and say you've done your CPD. Not quite as easily as you used to be able to anyway. We also find with ISA implementation, it became very clear in 2005 that those firms that simply bought a software package and didn't buy any training with it from the training providers, they didn't do well. They weren't able to use the methodology properly. You needed the package. And in 2010, we got that message out. If you're going to buy a package, buy the training with it, because we know from experience it doesn't work properly if you don't do that. A variety of things they consider. So before we go on to ISQC1 and I hand over to David, are there any observations at that point?
Right, good morning, ladies and gentlemen. I've been to Singapore many times, and I do a lot of work with my member firm, Crowe Horwath First Trust, so I do know Singapore very well. And it is, as I say, it's a pleasure to have the opportunity to speak to you through my work with Crowe Horwath First Trust, and I will not mention at my member firm again, because I'm not here to advertise them. I'm here to represent my professional body. But through my work with the firm here, I've learned a lot about the process of adopting standards and what they've been doing to move towards adopting ISQC 1 SSQC. And within the presentation on ISQC 1, ICW has put in material about what regulators are finding. Now, that is primarily from the experience of UK regulators, but much of what the UK regulators are finding is much the same as regulators are finding in other jurisdictions. And don't just think, when you see our references that comes from UK material, that in the UK the regulatory regime is any more onerous or any less onerous than anywhere else. Because Catherine's mentioned IFIA already, IFIA's membership is now around 40 regulators globally. It is skewed a little bit towards Europe because all the European regulators from all 27 EU member states are in there. But so too is PCOB, so too are most Asian countries. I was in Australia last week. ASIC, the Australian securities regulator, is a member. ACRA is a member. Several, Malaysia, the AOB in Malaysia is a member. So it's becoming a very broad body. There are other countries whose regulators are working towards joining IFIA, and the very nature of bodies like IFIA is, of course, it brings people together. They compare experiences, they compare approaches, they compare findings. So the people regulating you from ACRA, they'll be going to meetings periodically where they'll be meeting with people from ASIC, PCOB, UK Financial Reporting Council, and onward, and so on, and on and on, AOB, and on through the list. And they will, of course, be comparing the way they conduct and inspect their review processes, the findings that they come up with, and inevitably we will see a convergence of approach. At our committee meeting earlier in the week, one of our guest speakers was Arnold Schilder, who's the current chair of the International Audit and Assurance Standards Board. One of the principal project of the IAASB for the foreseeable future is the global monitoring of the implementation of ISAs, and the part of the title of the project that I latch onto is about consistency. I describe it within my own organisation as the consistency project. I think Arnold hadn't actually ever heard anybody call it the consistency project before. That's what Arnold and his board members and the permanent staff of the IAASB are focusing on. It's how ISAs are being monitored, and what they're interested in is the consistent implementation of the adoption of ISAs, to eliminate the fact that in one country, because of the nature of the profession and the nature of the regulatory regime, the application would appear to be overtly more onerous than in another country. Because without consistent implementation of these standards, we of course undermine audit quality. How can we rely on the financial statements of a global company, across border, across a transnational business, a multinational, whatever term you want to use? How can we rely on the financial statements if there has not been consistent implementation of the standards, if we have not applied consistent definitions? Last year, I gave a broadly similar themed talk to this one to Hong Kong Institute of Certified Public Accountants. I know their executive director responsible for quality very well because he used to regulate me. He used to be one of the executives at ICAEW responsible for ICAEW's Quality Assurance Directorate, and then several years ago moved to Hong Kong to run, amongst other things, their practice regulation. And Hong Kong remains one of the jurisdictions where the professional body is completely responsible for practice regulation. That will not necessarily be the case for that much longer, but that's the case at the moment. And one of his big concerns, it goes back to quality, back to consistent implementation of standards, is an area some of you will be exposed to, which is application of ISO 600 and reliance on auditors in China. The big challenge that he faces is how auditors go about relying on audit work carried out in China. Now, what I'm not saying is there's any particular quality issues about the audit in China, but what his concern is about the way that Hong Kong auditors have gone about placing reliance on auditors in China without necessarily meeting with those auditors, without necessarily reviewing their work, without necessarily giving them clear instructions and requesting clear reports, without necessarily considering whether there are any differences between the standards that apply in Hong Kong, the clarity ISOs, and the standards which apply in China, and without necessarily, and this comes back to consistent application, considering that there are differences in the interpretation and the application of those standards. Many of you are working with companies in China, and it will be and the Hong Kong regulators' concerns would, I'm sure, be mirrored by ACRA for exactly the same reasons. So consistency is very, very important, and a session like this gives us the opportunity to share our approaches. Something I see increasingly as I go around the world is although often the UK has perhaps been seen as setting the standard simply because we have had audit regulation for longer than many other jurisdictions, although we've not had independent audit regulation for as long as other jurisdictions, because it's only more recently that part of audit regulation for the public, for the top end of the public interest market, has shifted to an independent body, the Audit Inspection Unit, which is part of the Financial Reporting Council, body completely independent in its constitution of the accountancy profession. Simply because we've had regulation for longer. Obviously, as we all go through the experience of regulation, then of course things will converge ever more. Some of the most demanding regulators that I've come across, yes, probably many of you have had exposure to PCOB. They are demanding, but they're given a demanding brief. Some of the regulators in other European countries are very demanding, and part of that is because they have the backing of the criminal law in their countries, and a number of European countries, technically ethical violations are criminal acts. So in theory, an auditor could face imprisonment for an ethical violation. I say in theory because there's probably been no actual outcomes as such of that happening, but that's the way that the law is applied. In Australia, where I was last week, aspects of audit regulation are backed in, again, law, and it's not, and the outcomes again are potentially criminal. Okay, so again, that's the approach they've taken in applying these standards. So the international experience and sharing is important as we go about converging, but also as we go about experiencing what we find, to mean that we are genuinely applying these standards in a consistent cross-border way. So ISQC1 and the findings of our regulators. Many of you are here today, I'm sure, because you are in the process of applying SSQC and looking at the challenges of implementing it consistently in your own firms. So we will address the objectives of ISQC1, SSQC, and then it's got the 7 key areas. It's not actually a difficult standard, and much of it is common sense. It is proportionate. I can see out of the window the PwC logo, and it is ISQC1. The way it's framed, you can apply it in PwC, you can apply it in a sole practice. You know, it is proportionate. There is guidance. As I'm here as a member of the IFAC Small and Medium Practices Committee, there is the IFAC Quality Control Guide. We mentioned it elsewhere in the material. That has a lot of practical resources in it, aimed at the small and mid-sized practice. That is completely free from IFAC's website, and later on in the material we list some of the checklists and practical resources contained in that publication. You will find it very useful. To be honest, you don't need to rush out and buy a QC manual. That product is there, and no, I recommend it to you. It is very, very practical. It is scalable. I know that in some jurisdictions, people are finding ISQC1 challenging. I think that's more for historic reasons. If you've not had something like this before, then some aspects of it are a big step. On Monday at the IFAC Forum, a number of participants in a breakout group we had on regulation on Monday afternoon, they had concerns about ISQC1 in their jurisdictions. I think it was a combination of rapid implementation together with rigorous monitoring and regulation, which led, I think, to probably an atmosphere of fear and concern. Well, I've heard that before. When audit regulation started in the UK in the early 1990s, a lot of people thought the audit regulator was there, as Catherine described, to take them out of business. A lot of people thought they were doing the audit for the regulator. Now, who actually pays you when you do your audit? Is it the regulator who pays you? Actually, you pay the regulator. Yeah, no. So the client still has to pay you. And I think we've been through a similar fear in the UK when we adopted statutory monitoring of the public interest end. I have been monitored by the public, by the statutory end of it, the audit inspection unit. I went through my fully listed client being reviewed by them. It was a fairly challenging experience, yes. It was probably intellectually quite stimulating. Do I want to make a habit of going through it? No. But do I like acting for public companies? Yes. No, I did. So what's the choice? Does my firm in the UK stop acting for public interest clients who don't like regulation? No. What we actually realise is to be competitive as a provider of services to public interest clients, we need to go through the experience of being regulated not just by ICW, but being regulated by Audit Inspection Unit and being seen there with the public reports that come out from that, with the references in our transparency report to the fact we've been through that experience, and learning from and responding to that. And that's the shift in tone. When you first have to start referring to quality in your marketing material, that is probably a slightly odd concept. And I can remember when the regulator started challenging us about the way we'd written our marketing material. Did you ever sell yourself on quality? Did you ever go before an audit committee and say, I'm offering a quality audit? Those people over there, they say they offer a quality audit. You say you offer a quality audit, but it's a benchmark by which we have to be considered. And you can then develop the tone of your marketing material to to make the other messages you want to make about yourself, the more sales side, why am I so special? But that's got to be wrapped around by you're delivering a quality offering. So don't be challenged, don't be fazed or challenged by it. I think you'll find that a lot of what's in there you're already doing. And it's just therefore a case of pulling together what you're already doing. You'll probably find that you'll need to formalise some of what you've already been doing. You'll probably find there's a few areas will bring an element of discipline to yourselves. And if you actually stand back and look at some of that's actually leading back to simply good practice management, an element of formalising, an element of recognising this is what we actually need to do to run a good practice. It could well make you, as a result, a more efficient firm. And more efficient firms, not only quality firms, they're more profitable. And certainly speaking as a partner, anything that I can do to make the firm more profitable is not only in my partner's interests, it's in my personal interest. So just think back to connecting that back to good practice management, and that probably makes you feel, well, I'm not actually carrying some sort of burden because ACRA or ICPAS or the various constituent bodies of IFAC are suddenly dumping these standards on me. I think the other point to remember as we get into the detail is you're in a quality jurisdiction. And you're in a jurisdiction, when I first came to Singapore in 2004, and Singapore I always find a fascinating place to come, and I used to be the audit partner of a major UK engineering consultancy business that's had a lot of projects in Singapore and involved with a number of the projects, which has led to the complete transformation of some of the areas that are not so far away from where we are today. So I've seen that side of it through client work, as well as being a fairly regular visitor to Singapore as to how Singapore has changed. You're a quality jurisdiction. You have a recognised financial market. Your market's been winning market share. Now, I was talking with my colleagues over there when I was last here with them just over a month ago about the changing status of markets, and one of the challenges Hong Kong faces is they've got to bring in independent regulation of the type you have, of the type we have in the UK and in Europe, because Hong Kong auditors are now losing rights to sign on other markets, including your market, because they don't have independent regulation and oversight. They're still regulated by the professional body. So you have rights of access beyond your own jurisdiction, which some other auditors don't currently have. Now, that creates management problems for us in the networks, but also creates opportunities for particular auditors within an organisation. So to make everything that's going on around you work, you've got to be seen to be quality. We're in a global market. We have clients that are playing arbitrage as to which is the right market to go for. And which is the right market is not just determined by the actual money available necessary here and now. It's the reputation of that market. It's the ability of that market to be seen as a market that adds value over the medium and longer term. So there's a lot of economic issues that all of this leads back to. Now, there's a bit of advertising. This is our booklet and the website on that one. The one Catherine didn't bring, but you've got a link to a website here, and then we'll refer to the ISA booklet later on. Now, this one, Catherine, do you need to be a faculty member?
No, you don't. This is free to everyone.
Right. So this is part of ICW's role in communicating and reaching out on such an important publication. It's a good, practical publication. So download this. If you download this and download the IFAC guide, then you've got some very good practical material. What's its objective? Well, its objective is straightforward. The objective of your firm is to establish and maintain a system of quality control that A, the firm and its personnel comply with professional standards and applicable legal and with professional standards and applicable legal and regulatory requirements. Otherwise, the standards put in place by ICPAS and ACRA, by the regulator and by the professional body, you put in place a system of control to ensure you comply with those standards. And then next, sorry, I'm going far too, sorry, I was not looking at it, and of course it's perhaps thinking each individual bullet would come up. And then very, very importantly, the reports you issue are appropriate. Or put it another way, you've given the right report. You've not given the wrong report, whichever way the language is. The positive bit is the report is right. The report is supported by the work you have done. So, take it however many ways you like. You've given the right report. So that's absolutely critical. Now, we can all debate, because we're all good professionals, and we all have our own opinion. We can all debate what is the right work to back up that report. There are different ways of getting there. It's the informed professional is able to conclude that maybe you've taken different ways of getting there, but the way you got there supports the report. So that's the purpose of ISQC1. We list on the next two slides the 7 key areas, just elaborate on the headings that we listed a few moments ago. Let's put those up, and then rather than just going through those in detail, because you can read those in detail out of ISQC1, through ICW's guide, through the IFAC quality guide, through the other resources available to you. We'll just look at what regulators have been saying about ISQC1. So, document the operation of the QC system. Now, you haven't got a QC system unless you've documented it. It's probably a statement of the blinding obvious, isn't it? We have quality. Right, show it to me. When you go and do an audit and your client says, we have a system, what's the auditing standards say? They've got to document it. How can you rely on that system unless it is documented? Exactly the same with a QC system for an audit firm. Now, you need to document it. It's not difficult documenting it, particularly in a small and mid-sized firm. Be a bit more challenging for documenting PwC's system. I'll stop promoting them as well, but obviously I can see them out the window. Suppose I shouldn't be looking out the window, should I? But it's just a rather noticeable logo. But it's not that difficult, particularly in a small and mid-sized firm, documenting it. And material like the ICW booklet and material like the IFAC guide, they're partly there to help you document the system. It doesn't have to be, this is our QC manual. It could be you simply bringing together a number of different pieces of material you've already got or that you have originated. My practical tip on how to document ISQC1 is very, very simple. You simply go through the standard, identify all the main paragraphs, the ones that say shall, which now with clarity standards is pretty straightforward. You can pick up the main paragraphs quite easily, and then do a simple mapping document. And the way that I do this when I work with my member firms in my organisation is I've simply put together a table where the table has the requirements of the standard, which is fairly straightforward. You've got the 7 headings, and you just then follow those up. And I then have a column in which I then have a cross-reference to where we find the supporting requirements for each of these 7 areas and their subsidiary material. It is very straightforward to do that. So a simple mapping document is all you need to do, and then of course that will then help. We then come further down these requirements to what you need to do about monitoring the requirements. So a very simple bit of mapping to just link through the various material. When the regulator comes in, you can then show ACRA your mapping document, and so ACRA can then see how you have addressed each of the requirements. So that's just a very, very straightforward little tip. The practical material within the IFAC material also will help you put that together. So document the operation, and then obviously as you revise and review your QC system, you can then come back and obviously update it in the future. The lead from the top, the leadership aspect, there's the perhaps slightly more Americanized term, the tone from the top type term. I'm quite pleased ICW uses the term lead from the top. It sounds a bit nicer actually, that sounds a bit better. It's leadership. It is very, very important that people at the top of the firm take ownership of the QC and show that they take ownership. And that's a lot of the standard is about leadership. No. The managing partner has got to demonstrate leadership and take responsibility. The management board of the firm, the partners as a group, have got to take ownership of the QC system and set the right messages within the firm. That is very, very important. You know, times past in firms, and I mean I've been partner in 2 different accounting firms going back to the later 1990s. You know, probably when I first became a partner in 1997, perhaps the role of the management board was, yes, managing the firm. Managing the firm would be things like managing the firm's finances, overseeing the business development and client retention, and then probably quality came somewhere a long way down the list. You know, increasingly, the partner responsible QC maybe is not necessarily a full member of the management board, but is reporting to a member of the management board who has executive responsibility for quality. You know, it is very, very important. In my firm in the UK, the chief executive receives direct reports on quality from the partner with responsibility for all of our quality standards in the firm. So it's got direct report through. The reports on quality and on the outcome of internal reviews, external reviews, are not only sent to audit partners, they are sent to all partners. The chief executive makes it very clear this audit is, in my UK firm, our biggest single area of business. It is absolutely critical that all partners understand our record of quality, because it is critical to our business. If we weren't seen as being a quality audit firm, then we wouldn't be in business. Simple as that. You might be a tax partner who's qualified through the Institute of Taxation, not perhaps having started life in the revenue, qualified in the Institute of Tax, and you find yourself working around these strange people called chartered accountants who do this odd thing called auditing. And you just wonder why people can actually bear spending their whole working lives doing this practice called auditing. But you've chosen to be a tax partner in a firm of chartered accountants whose core business is audit. Therefore, you've got to take an understanding and interest in that. That message is very, very keenly put across. So the importance of leadership. The days when the managing partner or the management board say, well, marketing's far more interesting, or why do we mention quality in our marketing material? That's the sort of thing. That's now gone. There's got to be leadership from the top. You know, if your managing partner's not here today, you might care to get some time with your managing partner to remind your managing partner of some of the messages we're putting out. It really is part now of leadership of the business. And I'm going to come back and you'll see some of the regulators' experiences in this area. Now, we all act ethically, don't we? So I'm not going to go on at great length about acting ethically. We'll come back in a few minutes to some of the regulators' experiences regarding ethics, but the compliance with ethical standards, the embedding ethical standards in the leadership of the firm, in your quality control system, that's recognised by ISQC1. Now, ethical standards are nothing new to you. They are part of what we do, they're part of what we are, so that is just not difficult at all for you to embed ethical standards into your QC system. Client acceptance. Now, accept only those engagements where the firm is confident it can provide a service in compliance with these requirements. All of you have client acceptance procedures. All of you have always had client acceptance procedures. All that ISQC1 is doing is formalising and recognising client acceptance procedures and probably bringing it in with a degree of common sense, exactly as it says there, only take on work you feel able to act for. No, simple as that. No, none of us, I hope, are reckless enough to take on work we cannot service or we do not feel confident or able to service. Many of us have perhaps had that experience in our careers of asking that question, are we capable of servicing this? Which I then hope is followed by the question, if we accept the client, what do we need to do to enable us to accept that client? Many of us will have come across, hopefully, the experiences of others, whether it's reported through the professional media, and obviously through the general media, of failure where people have taken on clients they shouldn't have acted for. So that's just common sense and going through that process. Maybe when you go through the acceptance and the retention process, you might have questions, and the QC system is there to pose those questions and for you to then think, what do we need to do to ensure that we have the skills to and maintain the skills to continue to act for this type of client. Questions would have been through, and certainly my firm would be, if the client's got interests in jurisdictions about which we have limited experience, what do we have to do? It could be being supported by the network member firm. It could be by making sure we ourselves visit that jurisdiction to meet with the auditor. It could be sector expertise. My firm in the UK does not act for banks. Why do we not act for banks? Well, in part, the banking market in the UK is very narrow. We don't have many banks. They are very big. It's very specialised. It's very heavily regulated. We do not act for banks. We do not seek to act for banks. That's because of the nature of our financial services market. Being a relatively large firm, people often say, why don't you want to act for banks? Well, do I want to be the auditor of HSBC? Does my firm, and I'm quite happy to stand here and say, my firm does not want to be the auditor of HSBC. My firm is not capable of being the auditor of HSBC. I suppose I could rephrase it, we could be capable of being the auditor of HSBC, but the investment needed to even have the slightest or remotest chance of being considered would be astronomical. So don't do it. So it's simple as that. There are certain sectors we wouldn't want to go into for, again, much the same reason. So just common sense is the issue here. So that's, again, straightforward enough. Recruitment, development, supporting capable and competent staff. So the whole HR process. Now, much of that is, again, probably documenting what you're already doing in respect of HR. I've got a few points I'm going to come back to you on that later on. You may need to, in fact, you will need to, certainly if you're anything other than the smallest firm, get help from your human resources staff in preparing the policies in this area. Now, HR people educate them at auditing standards. So that's a bit of a revelation, isn't it? But hopefully your HR people don't say, I didn't know the firm did audits. That might be interesting to discover, wouldn't it? They actually find out what the firm, I've certainly gone back in time, worked with HR people who probably didn't actually know what the firm did. But I think we've all moved on a bit in terms of the whole professionalism. But it's a very good way of being positive to involve your HR people in the operational side of what the business is all about. Give them these requirements, the standards, and I'm going to come back and just show you some of the actual operational challenges that regulators have found a little further on. Deliver quality audits. Well, you do deliver quality audits that comply with law and regulations. So the law of the land, the regulations set within your jurisdiction, standards, the ISAs as adopted within your jurisdiction, and then obviously any specialist sector standards that you find out. So all ISQC1 is again embedding is just the requirements of the body of ISAs of putting in place a mechanism to comply with the body of ISAs as a whole and how you go about in doing it. So all it's doing is picking up the other 36 or so standards and just saying that you've got to comply with those as a body and other requirements such as those that are written down in law. And then monitoring. Now again, I'll come back to monitoring and the regulators' experience on monitoring a little bit further. Monitoring is very important. Again, in many jurisdictions, monitoring is comparatively new in terms of firms. Certainly, consistent, rigorous monitoring of the type expected by the standard and by regulators is comparatively new. It does need resources put behind it. It does need commitment to follow through. You've got to be prepared to challenge your partners and your senior staff with the findings from your monitoring. Simply saying everybody has passed is not enough. You've got to come up with a mechanism that leads into the next bit, continuous improvement. The monitoring's got to be twofold. We're all aware of the need to monitor completed audit work. That we're all familiar with. I'll give you a few thoughts about the way we go about doing that a bit later. You also, in the area that people are more likely to fall down on, is you need to monitor your compliance with ISQC1 and promote continuous improvement. I think that's an area that fewer people really are aware of. There's some monitoring guidance in the IFAC guide to help you monitor your compliance with ISQC1. If you go back to the mapping document I suggested for documenting your system, part of your annual review of compliance with ISQC1 is to revisit your mapping document and just think, how do I audit my compliance with the mapping document? What do I need to do to check that communications from the CEO refer to quality? What do I need to do to check that we're complying with the HR requirements? What do we need to do to check that we've carried out a sufficient number of reviews of completed audit files? What do we do to check that we're consistently applying our policy over the acceptance of new clients and so on? So it's putting aside time and resources. ACRA, when they come in, they of course, when they are auditing you, will of course ideally be testing your control system and testing the results of your own reviews. That's really, if you can get your firm to that position where they can have confidence in what you're doing, then that makes your life a great deal easier than having to sort of start again from the beginning. Now, what do the regulators actually have to say? Now, clearly the next bit of the material is UK focused because of the experience that ICW and ICW's members have faced, and his experience coming through from ICW's Quality Assurance Directorate and the experience that the volunteers on Catherine's Catherine's committees and working parties have had from the statutory regulator, the Audit Inspection Unit. So, too much, sometimes not enough. Now, probably around the world as people move towards adopting ISQC 1, the not enough is very much the experience in the early days. There is the danger it can go too far. There's the danger you can just get weighed down. Many of you will have worked with businesses in the financial sector, and in a good many jurisdictions, the financial services industry is just weighed down by regulation, to the point you can almost not act. It's almost impossible. It's almost impossible to act just because of the burden of regulation. So what you've got to try and get to a point is you don't try and over-regulate to the point that that is actually impinging your ability to deliver audit work. So it's trying to strike a balance. It's getting your templates and manuals right. Now, that's what I've said already, is a mapping document will help you. You've then got to keep the documents under review to ensure they continue to reflect what you're doing. People, perhaps what the slide should have added is partners and staff unaware of, Catherine's just going to note for next time ICW uses this material, partners and staff unaware of firms' ISQC1 procedures. People need to be aware at all levels within the audit practice, and I've said within the partnership, really the partnership as a whole. The partnership as a whole needs to be aware, because in most of your firms, audit is your biggest service line, and for many of your firms, audit is the dominant service. Audit and audit-related services are your dominant service line. So people need to be aware. People need to be aware that when they are completing, say, an audit senior completing a job assessment form for the juniors that work for them, that the reason they're completing this job assessment form is not because the staff partner insists they have to do so, but because it is monitoring the development and progress of your audit juniors, promoting consistent, continuous improvement and the continuous development of your audit juniors. Not that you fill in the assessment form when you finally got 5 minutes spare because you've been working your staff at 110% utilisation for 3 months continuously or something. You think 110%, is that all? Right. But that actually then leads to other issues. And then it's then important you do keep the documentation updated. Don't go away and think, I've done my ISQC1 project, good, done, that's it, I never have to do it again. And as the standard's not going to be updated in any big way for many, many years, I don't ever have to do it again. Things change. So you've got to reflect that ongoing change as you go along. So let's just see what ICW have put here for us to think about. Documentation. Policies and procedures appropriate to size and nature of the firm. As said, what's appropriate for a Big Four firm is not going to be appropriate for a sole practice. So it's get the right balance. Now, your statement of intent, that would be right for everybody. We're a quality firm and we seek to meet quality standards. That's your statement of intent. Now, the procedure, that again is that's the practical balance. What is right for you? And as I said, relatively simple documentation using mapping, using checklists, cross-reference to other materials and resources. That's fine. Many of you will be using intranets in different ways. Your intranet's a perfectly good platform to, even a simple intranet, to assemble together your quality materials, picking up what you've already got. So it's not difficult. But when the regulator comes, at least say, well, this is our library of ISQC1 materials, and here's the mapping document or checklist that that guides me to them. So we've given you here an example policy. Now all you need to do is just take that wording and just appropriately adapt that. And we're going to use a very straightforward 4-line procedure. The firm maintains an ISQC1 file which includes policies to address the elements of a quality control system. So just take that away and then support that by the file, of which the opening part of the file is my mapping document. And you're well on the way. Now, let's carry on to some more thoughts of the regulators. The leadership from the top. Now, I've already referred to this about the leadership, about consistent messages. Again, a practical thought, especially for the partners in the room. Does QC appear on the agendas of partners meetings? Now, obviously not everybody here is a partner. Some of you probably sit there and wonder what does happen at partners meetings. QC ought to be a regular feature on the agenda of partners meetings. It does not have to dominate. It does not suddenly push business development off the agenda, but QC should be a feature of partners meetings. Worth remembering, your regulator has got the right to look at the minutes of your partners meetings. Your regulator can look at anything. Our regulators anywhere can look at anything. They've got the right to see it. So if they see, when they look at the proceedings of partners meetings, that QC doesn't get mentioned, then the next person who asks you is QC discussed at partners meetings. It might not be someone like me. It could be the regulator who's asking about the role. So the QC should be referred to at partners meetings. The results of your monitoring ought to be communicated at partners meetings. It's an important part of your business. We're talking about the fundamentals underpinning your audit practice, which for most of you is the biggest product line of your businesses. So it's very, very important that right at the top you've got the goals. The references here to walk the talk. The CEO, the managing partner, being seen at the appropriate briefings, doing their CPD, setting the example is again very, very important. Promote continuous improvement. Don't just, if you've got a problem with an audit, don't point the finger and blame someone immediately. Understand what the causes are, how you can learn from it. So it's take responsibility at the top, promote that responsibility, involve the senior people, promote the culture that makes quality control central to the way the firm operates its audit practice. Again, that's been one of the shifts in the way the standards are operating and being applied, and the mindset of firms is we all used to think that we were quality practitioners, but did we always have the evidence to support that? And it was probably implied that we were quality because of who we were, because of the qualification we had. Now we've moved on from that about this culture of quality and this adherence to quality, which is not something that we've had in such an explicit way before. I mean, there's one professional body in a European country which, that country and that professional body's attitude to ethics for many, many years was, we don't have a code of ethics because we hold our qualification, we're a member of this professional body, and by virtue of being a member of this particular professional body, we are ethical. Which is a very good professional body, and it's a country with a very, very strong deep-seated underlying set of principles in what is probably one of the most difficult professional bodies to join in Europe. It is not easy qualifying in that country. And it's very demanding standards. Now they've realised that they move on just because you are a member of the professional body, just because you've been through the rigorous process, 5 years of very demanding examinations to become a member of that particular professional body is not itself enough. Now that will help create the culture, but you've then got to project that culture as being central to the way your firm operates. Again, that's a challenge for some people, is operating in that type of culture. The other one is the balance with commercial considerations. Commercial considerations are a balance, and again, as this comes along, some of your more commercially minded colleagues may, perhaps when first confronted by standards of this nature, find them somewhat challenging. Now, quality and quality standards are not meant to be undermining your commercial development or undermining your profitability. I've referred already to efficiency. I've already referred to the fact that if you use them carefully, if you use them imaginatively, if you use them with innovation, then they can make your firm a better firm and a more profitable firm. So that's why I see the connection between QC standards and practice management. There's nothing that I've not said already and nothing that I won't be saying later. There's nothing that Catherine has said so far today which is anything other than good practice management. If you're not committed to quality, you're not going to be a good firm. Just one observation. In the breakout we had on Monday about regulation at the forum here, one of the questions that was put to our delegates was what are the most costly regulations to your business and your clients? Now, those people who just stuck to thinking like accountants said, QC standards, accounting standards, auditing standards, that type of thing. A load of us from Europe said, what do you imagine a European would say is the most demanding regulatory cost to their business, their audit firm, or their clients' businesses? Quite a few of you have had exposure to quite a few of you have exposed to European businesses. What would be probably the most demanding regulation, for a European? Guesses? No prizes, but no. Labour law, human resources law. We've got very, very strict, very demanding laws about how we manage our people, and the extent of which that certainly in any mid-sized upwards partnership, really as far as the labour law is concerned, the partners are staff, because your individual ownership interest is so low. As far as the law is concerned, you are an employee. So employment law can apply just as much to partners. We might own our bit of the business, but we don't own such a big bit that as far as the law is concerned, we are not employees, and therefore, if our partners said, right, you're past it, time to retire, you could actually turn around and say, under the law, you can't force me to retire, because the law is now against age discrimination and that sort of thing. You've got to come up with performance reasons why your partner should be thinking about retirement, not in your view they're past it. Because otherwise off we go to the employment tribunal. So labour law is really very, very important, and obviously you then have to think, how can you then be a good employer? The last thing you want is to get into lots of disputes with your employees, because they're very, very expensive and stressful to sort out. Now, commercial considerations not override quality. Now, European labour law brings with it, for example, controls, restrictions over the hours that people work. Now, there are ways of flexibly working with your staff and your partners You know, I own this business, I want to work 80 hours. Well, I don't actually work 80 hours a week, but I'm an owner of this business, I want to work 80 hours a week. Well, or I'm a senior manager in this business, I want to be a partner, therefore I want to work 100 hours a week, because the more hours I do, the more likely the partner's going to promote me. Well, you can run into some labour law problems with that, but there's ways you can manage it. It's not, certainly in countries like the UK, where there's been an element of flexibility in how they're being, sensible flexibility in how they're being applied, you can get a balance. So you can use that, because a few people in the discussion group then turned around and said, well, thank goodness we don't have law like that. I make my staff work 15 hours a day. Now, I know that you're in a hard-working culture, but people who work 15 hours a day, every day, week in, week out, does that lead to quality work? You know, just reflect on that. I mean, I know. Obviously, jurisdictions like yours, you know, there is the culture of working very hard, and obviously, many of you are working on very tight deadlines. But it's getting that balance, and the commercial considerations. Let's get as many hours as we can out of our people. Does that actually lead to quality? Is everything being done properly? Another key bit of quality would be fill in your timesheets, because you actually got to show the real value of the work you're doing. Because if your timesheet's only recording 8 hours and you're actually doing 14 hours, then have you got the audit approach right? Have you got the price right to the client? Now maybe the client won't pay for 14 hours. Maybe you can at least go back and say to the evidence to the client, look, here's the extra hours we did. I think we need to have a discussion and try and get some more value out of them. So that balance, you know, quality does not undermine commerciality. Quality can be used to make you more commercial and make you more efficient and make you more profitable. Now, ethics. I don't feel we probably need to really go through all of these. I think you're all very much familiar with ethics. So use the adoption of ISQC 1, SSQC as the opportunity to update your individual guidance and ethics in the firm and remind people about ethical standards. From a practical point of view, and what the regulators are picking up here is the guidance on independence. It's written, but are there people there to then help people understand and apply that guidance? So are you holding out, for example, a group of people in the firm who are the people you consult on ethical issues? Now, at UK regulation, we have to have an ethics partner. So the ethics partner, he's ethical. My friend, the ethics partner. But my ethical friend, and he is very ethical, we go to him when we have issues. We go to him when we get clearance on issues. I mean, I had 2 or 3 years ago a client where, a public company where there was an emergency and we were asked to provide emergency accounting assistance. And so I devised an approach, wrote it down, went to talk to the ethics partner about it. The ethics partner cleared the letter that I wrote to the chairman of the audit committee, explaining under what terms we would deliver that service and how it would be delivered. So the ethics partner was there to provide support to my explaining how we would apply an ethical safeguard. So the ethics partner is there to support you. So make sure you document the guidance you're giving in the firm. You're giving practical guidance and practical help to people. The annual statements. Firm personnel, my interpretation, and I was a compliance partner, was head of compliance in my previous firm for the whole 10 years I was a partner in that firm. And I was then audit compliance partner in my current firm and for a number of years and responsible for approving the statements of independence. In my view, statements on independence should be signed by everybody in the firm. Absolutely everybody. Some cultures and some jurisdictions, Perhaps it's restricted to the view is we restrict it to professional people in the audit practice. Well, everybody is seeing it. The person who opens the post, they're seeing the payments coming in, they're seeing the letters coming in from the client. There is much involved. The person on reception, the person who manages your kitchen for you, they're as much part of the team as anybody else. And I take ethical statements from everybody. After all, the financial interest in the client may not be held by a member of the audit practice, could be a member of the tax practice, or could be a member of your support team. So I would involve everybody and devise appropriate briefings that bring the whole team in and are relevant to the members of the team. And that's an area regulators do find that the statements aren't broad enough. Make sure that people are encouraged to complete the statements properly. It's extremely dull picking up a file of 50 statements or 100 statements or whatever many statements there might be in the firm and seeing they all look as though they're identical. You know, people maybe have some connections. Most of them would probably not be relevant. Make sure also people do fill them in properly. So your younger trainees, your new trainees, make sure you do educate them. I've sat there and read one saying, I have an account with HSBC. Well, the firm doesn't act for HSBC. It never has done. So quite why a staff member wants to tell me they've got a bank account with HSBC, I've absolutely no idea. It goes back to bad briefing, doesn't it? Some people think they've got to disclose their bank account to us. Well, they don't. You know. So just again, make sure people are sensible, and then make sure they're reviewed. You know, for a number of firms in my organisations, I go around the world who tell me we've reviewed our independence forms. Well, where's the evidence? Where's the evidence of someone signing their review? Oh, we didn't sign them. Well, you haven't reviewed them if you haven't signed them. That's the modern approach to this. So again, keep them reviewed. It's not actually that difficult, but it's just monitoring them. We talked about there's often a lack of understanding. It's going beyond the standards. It's people understanding and people supporting each other. We talked about acceptance earlier. Only accept engagements where the firm is confident you can act and provide a service in compliance with the regulations. Now, so it's thinking about the competencies of people, thinking about the integrity of clients, thinking about ethics. I mean, integrity, we all act for people with integrity, don't we? Of course we do. But it's just think through, so you've just demonstrated thoughts, and if you've got any concerns, you've dealt them. I can remember when I was a trainee, and that was quite a long time ago now, in the late 1980s, I trained with one of what was then one of the big 8 firms. And I can remember on a training course, somebody from another office in the UK, in the firm, sort of rather proudly announcing to us that one of the clients he was audit senior of had been funded by the proceeds of a bank robbery. Now, that was sort of nice bit of cheerful hearsay, although many, many, many years later, when I was a district society president in the ICW, one of the 20 or so branch presidents, my district happened to be talking to a good gentleman who's now a very good friend of mine, who was the district society president for, as it happened, that region of the country where this particular office, the firm had been, that acted for the client that allegedly been funded by the proceeds of a bank robbery. And it was quite interesting talking to this particular gentleman, because the backer of that particular business, over the years had attracted modest headlines, things like he'd bought the local football team and had various particular businesses in a particular town where where this colleague was the branch president, was a practitioner and so on. So this particular gentleman had a certain amount of notoriety. Now, whether or not he actually funded businesses out of the proceeds of a bank robbery is another matter, but this particular individual, who I have to say he had never himself acted for, but there was certainly an element of questions about integrity that had been around for a long time. So there are always people in business who perhaps have a certain aura about them. Now, you might decide you're quite happy acting for them, but just go through that process of thinking, are we comfortable? Now, of course, nobody, certainly where I come from, would ever say my client was acted out the proceeds of a bank robbery, because we have proceeds of crime legislation nowadays. So you wouldn't dare even think about mentioning, let alone defamation. But it's just think about the integrity of people you're dealing with in the back. I mean, many of you do have exposure to businesses in places like China. I know it is challenging doing business in China. I've done business in China. I visit China periodically. It has its challenges, and that's probably a particular area. And I can easily imagine the comment coming back from you, well, it's all very well him saying this, but you know, China, I've done business in Russia, that sort of thing. There are challenging places, and it's think through, it's document your conclusions and get support from your colleagues on this one. Get the partner sign off. You can't be judged to have done wrong if you followed your procedures and you've consulted the firm and you haven't accepted the challenging client with interests in China, and you alone signed off, and you alone had made a marginal decision skewed because the fee's jolly good, isn't it? That sort of thing. But instead you show you've consulted, you've followed your in-firm standards over client acceptance. Nobody can say you've done wrong. And that's what I'm saying. There are lots of places in the world where it's challenging doing business. Wherever we come from, there are issues. And it can then, on all the other issues that I'm going to bring up now about some of the areas of weakness regulators have found, when I've just focused on some of the geographical challenges. I touched on the competence point using banking, which from where I come from is a bit of an extreme example, but all of us again have sectorial challenges. I, as an audit partner, I acted for a number of resources businesses. Fine, we as a firm have skills and experience in acting for resources businesses. Again, if you have not acted for a resources business before, it is a challenge. There are specialist standards, quite specialist aspects of evidence, specialist reliance on experts. So you've got to think through, do I have the competencies? Am I prepared to build those competencies up, not just myself, but my team, to be viable? So the involvement of second partners, all too often you see these decisions being made in isolation. Think about the conflict with other services. We're heading towards greater restrictions on the delivery of other services globally. That we're heading that way. It's regulators and legislators guiding us that way, not necessarily the ethical standard setters. So always think, what risks could there be from the other services? Make sure you've completed your internal conflict check and properly documented it. So all of these areas we can potentially fall down. So that's just some reminders. Some of those you might say, yes, I've dealt with that in my firm. Let's just think through. The HR points, raised them earlier. Now, what ISQC1 is saying on HR really is just sensible HR management. It's just good management of your people. And by good management of the people, it's not just the staff, it's the partners as well. It's getting the best out of your partners. So just covering the HR policies in the firm. It's linking it to the training and the CPD. Now, training and CPD is about getting value for you. Don't do CPD because ICPAS or the ACRA say you have to do CPD. If that's why you're doing CPD, then you are probably wasting your money and you're wasting your time. Now, because your charge-out rates are actually far more material than probably the fees you pay for attending many of the courses, the dead time you're sitting on this course you're getting absolutely no value out of. Just imagine what you could be doing with that dead time, billing it to the client. So it's make sure you get the value and you use the value from the CPD that you undertake. You get value from the training. So it's that, again, it's balancing the commerciality and the quality that you generate from it. Embed the HR policies with the policies coming out from standards like this, the commitment to quality, people being independent, people being committed to ethics. Which leads us nicely into the next slide, because the next slide does say integrated HR and audit policies. Work with your HR colleagues and make them aware of what's going on. The next one is very, very important: the effectiveness of performance evaluation and the reward system. That is really, really, really important. And then we just list into some of the weaknesses that the regulators have come across. Now, the appraisal system needs to include feedback from your quality assurance reviews. Now, increasingly around the world, the appraisal of partners and staff is considering quality criteria. Regulators will increasingly say to you, how are you reflecting the way you promote people, the way you compensate people, how are you reflecting quality measures? When regulators first raised this, the response of many practitioners was, I'm in business to earn fees, and I've got to reward my people for delivering fees, not for the way they've signed off their audit files. Increasingly, we're getting a balance between the right balance between the two. I can remember back some years ago the regulator finding on an appraisal form in my firm, I don't mind telling you the story quite briefly. Somebody had written on her form, and the appraiser had obviously encouraged this. The two of them had together said, person believes in the importance in cross-selling, and we have agreed some targets for her to cross-sell on her audits. Really ethical, isn't it? Now, both of them, I have to say, the partner concerned is a very experienced, very senior, very highly regarded audit partner. The audit manager is a very good, very competent audit manager. But that was just the mindset of several, not all that long ago, but enough for things to change, to write down about the importance of cross-selling on their form. I can certainly remember a good few years ago now in profit sharing, the characters who did the most selling got the most profit. And those who were boring audit partners who couldn't sell got the least share of the profit. And back in really crude profit sharing systems in a previous firm, when you voted on each other's performance, real crude stuff. The character who got the most new work in got the most votes because everybody else was getting their cut of it. But of course it meant he got more. But that we've moved on from that. Quality measures are there. I know of a firm in another part of the world where failing a QA review, someone gets hit in the pocket. They would get a reduction in their profit share for failing the QA review. I know of firms elsewhere in the world where part of they call the premium profit share the bonus, and a dedicated part of the bonus is attached to the performance in the internal QA reviews. Now, whether you penalise people or how you reward people is up to you. When you promote someone, you've got to link that promotion to quality measures as well as performance. You say the regulator comes and says to you, I see you promoted a new partner last year. Yes, I have. Very good person. Why did you promote them? They were very good at cross-selling. Oh, I see from reviewing their work, they only got an average grade on their last file review. Why didn't you promote that senior manager who's always getting excellent grades in the file review? Can't sell. Boring. Technician. Techie. Reads accounting standards. They really have read the accounting standards amendment. Would never make them a partner. No. Well, the regulator might not say that person is the right person to be a partner, but they might say you've got to better thought through the criteria promoting the good sales guy. Well, the sales guy's never been on his CPD, is really behind on their CPD. Oh, they're too busy selling to go on CPD. You know, you've got to get the balance right with this. The same thing within the reward culture within the partnership. It's not discouraging successful commercial performance, it's encouraging quality and getting a balance. And again, we're opening our books up to our regulators. It's very, very important. That also leads me with what we're saying about performance evaluation. One of the areas I would say, just globally in our profession, is the weakest when we're looking at evaluation, is partner appraisal. Some of the standards of staff appraisal around the world are not brilliant and could be better, but partner appraisal, one country in Europe I went to last year, very good firm we have there. Where's the partner appraisal for? Have you appraised your partners? Oh no, we're all friends. We formed this firm together, something like that particular case, nearly 20 years ago. We've been friends, we've been together 20 years. We couldn't possibly do that, Great. Sometimes it's friends who've done the dirty on each other, but it's reflecting the culture they're in. European regulation will force them to bring that in. And I think the sooner they take the rose-tinted spectacles off and realise that modern professional regulation for a firm, they're a leading firm in their particular market, modern professional regulation means they've got to sort of suddenly wake up. We're not just friends. We've actually got to evidence some form of appraisal of each other and each other's role and contribution to the firm. Again, it's using appraisal to get the best out of people, not because somebody's come along with a stick and say you've got to fill in an appraisal form for your partners. Partner appraisal is a challenging subject. Appraising your co-owners is not easy. Appraising people who you sort of spend a lot of time working very closely with and have the professional relationship that comes from being partners is not easy. There are consultants out there, even for fairly modest fees, you might be able to get some help in delivering that. And that I would say is, from my view, probably one of the weakest areas in evaluation, and then where it has been done is often too skewed towards financial matters. Now, consultation, I've touched on consultation already in respect of ethical matters, but standard ISQC1, SSQC1, often a failing regulations find is people aren't properly documenting how they've gone about getting consultation. Now, as a firm, if you want in your documentation, you could specify we need to consult when, and perhaps using some of the titles we've got there as perhaps a starting list for your own minimum requirements for consultation. Now, the danger with that is, of course, you have a shopping list, and that's the only times you consult. Certainly what you might say, any time we give an audit report other than the standard report, so any time there's an emphasis of matter or obviously more rarely a qualification, we have to consult. Up to you, but there's something you might want to put in place. Consultation might have involved, of course, using a professional helpline. Again, document. It's all very well consulting, but of course, standards and say document. Oh, it takes time, but you've got to, without the evidence, firms are going to say to me, we the partners always talk to each other. Great, very nice you always talk to each other. Well, we always discuss these issues. Afraid the standards nowadays say you've got to have documented your discussions, not the fact you went into the partners' room and said, what do you think? Well, a few minutes spent, we had a word with, and they agreed with with my view, or the file will note you've written on the application of ISA 450 to a complex valuation, and I then discussed it with who concurred with my view. That's all you need to add to it. That's all you need to add. I sought a second view. Now, another area, and so the Engagement Quality Control Review, the ECQR. Now, much of ISA 220, when we apply QC at the engagement level, is about the ECQR. So whether we're talking about the individual engagement level or the firm's policies on ECQR as a whole, It's very, very important. What the standard says is all listed entities, now listed is as defined within your own environment, and other entities as determined by firm criteria. You could say all our clients need an ECQR. I think if you said that, I'd probably say why. You might specify, I don't know, a partner who's had failings and reviews, needs more ECQRs done or EQCRs done. You might specify recently appointed partners have more done. Might be specialist sectors like financial services, whatever. It's up to you to determine the criteria. Now, regulators find the criteria either is not clear or has not been sufficiently or has not been consistently applied. Next is the skills of the ECQR. A real problem that regulators do come across is the wrong people doing the ECQR. So they don't have necessary skills, experience, independence. So it's got to be someone with the right track record. Which is what I'll come on and mention the sole practitioner, which is the question about the sole practitioner. Within a partnership, obviously you form a view as to who should be doing this. It shouldn't necessarily be you should be thinking about experienced partners. Someone who's newly appointed as an audit partner, who's been promoted within the firm and has very limited experience of the sign-off of audits, should not be the EQCR. They've got to be seen to have the experience first before they do it. Who chooses the EQCR? It's not the engagement partner. Now, clearly in a smaller firm, it may be the best way to probably evidence is it's the group of partners as a whole making the decision. All too often, and through having been obviously partner in multi-office firms, all too often we want the EQCR to be another partner from my office because that's easy. Rather than having a partner from another office. Well, it may well be another partner, not partner from another office is the more appropriate person. I want this person to be the EQCR because they are the former engagement partner. Well, hold on a minute. What about rotation rules and calling off periods if you've been the rotation partner? One of the big four firms in the UK was criticised by the regulator for the way they were switching the lead partner and the EQCR around without having properly considered the calling off rules in the ethical standards. The firm tried to throw back, well, this is using people who know the client, and the client think this is important. Well, maybe the client thinks it's important, but unfortunately the ethical standards raise certain concerns about that, and that firm, as I say, were publicly criticised by the regulator for their policies in this area because the EQCR was not independent enough. They've got to be independent of the engagement. The EQCR is not going to client meetings. It's not someone who's highly visible to the client. It's an internal QC role, not a second partner whose role is to help the engagement partner on a day-to-day basis. Don't think of it as a second engagement partner. Don't think of it as the person the client telephones when the partner's out of the office, that type of thing. In the sole practice situation, then you need to look at consultancy type arrangements. It could be an arrangement with another practitioner. It could be working with professional bodies to find appropriate people. It could be working with a larger firm that you have a relationship with. So there are ways of dealing with this and, again, documenting the way you go about doing it. So it's not there to say I can't act for higher risk, high profile clients if I'm a sole practitioner. It's the sole practitioner's got to get their support. If you think about it, it's getting a concurring review. It's a concurring review for what you've done. You wouldn't like to go to a medical consultant if you've got a complex condition, and that medical consultant doesn't consult with doesn't get a concurring review on someone else if what they're doing to you is fairly high risk, and they say, well, rather than even speaking to my colleague in another hospital who's the other expert in the area, I'm just going to go ahead and apply my own solution. It's being seen to take responsibility. So the concerns regulators come up with would be over independence, over competence, over seniority, timing. EQCRs are not done on the day the planning memorandum is signed off, or even worse, the day after. Oh, we haven't done the ECQR. We're going to do the audit tomorrow. There you are. Sign it. Done. That's it. That's not proper review. That's not independent, properly thought out. Oh, it's the 60th day before the file. It's the day the file needs to be closed down, locked down. ECQR, where are you? Sign this file now, otherwise we'll get into trouble with the regulator. Its timing of the review at the completion stage has got to be proximate to when the engagement partner is forming their opinions. So there's got to be evidence of it. My view is the checklists, which have to be filled in by the ECQR, have to be supported by written notes showing how the EQCR has challenged the audit team, the questions they've raised. In my view, a checklist alone is not enough. Signing individual working papers is not enough. There's got to be evidence of the thinking and the participation of the EQCR. And very, very important, the EQCR needs to book their time. The EQCR isn't recording that they've put time into the engagement. What might you infer as the amount of time they spent on the engagement? Evidence. After all, to do an audit, we need to see evidence. And we've got to see evidence the EQCR actually did their bit. Not filling in a timesheet. The partners in the firm don't fill in timesheets. I've had that one around many countries. Partners don't fill in timesheets. Fine. Maybe I actually think it's actually good business filling in timesheets, just because at least you know how much your jobs actually cost to do. Just because the partners are paid in a different way doesn't mean they don't do timesheets, because you could actually be missing opportunities for value billing. Same thing is, how can you demonstrate the quality of work you did if you don't know how many, if you're not documenting the hours you did it in? The regulator can look at your timesheets, just by the way. They can look at everything. File lockdown, we've mentioned the whole documentation. Standard says a lot about documentation. You've got the 60-day rule, or however it's been locally applied for lockdown. In your automated audit system, you can obviously build in lockdowns as you see fit. Catherine's mentioned about suitable audit systems, and she's given ICW's view about the challenges of using paper-based systems. You need to prescribe your own policies for file completion, your own policies on review notes. If your policy is to destroy review notes, then you've got to consistently apply that, but you've got to ensure that the responses to review notes are reflected on the files. For smaller entities, there is guidance. There's the UK's Practice Note 26, which is really good and practical. There's also the IAASB guidance on proportionate application of ISAs. And all of that is really about getting the documentation right in this area. I'll also link with documentation just a few real nice, just other practical matters the standard addresses, which is over just how you manage the documentation. Things like file backups, laptops, security of laptops, backing up what's on laptops, securing the documentation you produce. Someone was telling me that when I was in the Middle East earlier in this year, they'd had a bad experience with an audit file, because the audit file was on a laptop. The laptop was in a car. It wasn't the one that, coming from Europe, we periodically have to deal with the firm where the car gets broken into and the laptop gets stolen. It was anything but the laptop being stolen from the car. It was the car was parked the interior temperature of the car got to 60 degrees and the hard disk got warped by the heat. Warped hard disk, valuable work in progress, can't get hold of anymore, so computer doesn't work anymore. Now, all of us have our horror stories of people who've lost their computers, had their computers stolen, their computers have crashed. If you're using an automated system, get the backup procedures right and make sure people consistently adhere to them. Otherwise, you could have $20,000 worth of work in progress that quite literally disappears into the ether. Now, go back to the client. Sorry, missed your deadline. Or even better, go to the regulator. Where's the working papers? Oh, the laptop failed. But I still signed the opinion anyway. Goodbye to your livelihood is all I'd say from that. So monitoring, we've referred to quite a lot about monitoring. I think we've just got a few minutes left, so I'll just say a bit about this, and then quite a lot of this then just dovetails and overlaps into ISO 220. Continuous improvement monitoring. Cold file reviews, I mentioned earlier, it's for you to determine what's the right cold file review in your firm. Don't have the EQCR doing a cold file review. I've come across that because they're reviewing their own work. Certainly the audit part, somebody involved with the audit shouldn't be doing a cold file review. How many do you do? Well, and when do we do them? Well, you can probably find a suitable time in your firm for doing the reviews. It's probably better to do them within a particular focus period of the year. You don't have to be the technical manager to do it, and if you're not big enough to have a technical department, it doesn't matter. It's allocate the work among the other professionals to really mentor each other and encourage sharing and development among each other. How often, for many of your firms, reviewing each partner once every 3 years is probably enough. Now, if you're a sole practitioner and you're doing one file review, or you need to then perhaps you need to bring, if you're a sole practitioner, you'd need to really bring someone in to help you, an outside consultant. Having one file reviewed every 3 years is not enough, so its appropriateness has got to come into that. Certainly, then I'll use the sole practitioner example. The sole practitioner has, say, 3 audit managers, then really sensibly would say, get a reasonable coverage, and I'd go for, in any firm, a minimum of, say, 2 files a year is probably right. And that means with the sole practitioner, we say 3 audit managers, then you're getting reasonable coverage, and each manager is being reviewed at least once a year and being reviewed a couple of times over a 2-year cycle. If you're a bit bigger, then you can obviously be a little bit more elaborate because you're going to get that coverage over that longer period of time. The standard says 3 years. Don't be dumbed down by the standard. Again, I have people as I go around the world saying to me, the standard says we review a partner once every 3 years. It's got to reflect your size, your risk, your client profile. The firm I'm a partner in the UK, anybody with public interest clients has to be reviewed every year, minimum standard. When I was an active partner in the firm, I had the biggest portfolio of publicly quoted clients, so I was always reviewed. That was it. And that was the price for specialising in public companies. You accept that because you're a risk to your partners by virtue of doing that. So it's got to be appropriate. I loathe it when people say partners are reviewed once every 3 years because the standard says so. It's risk management, and it's how you trust each other and how you ensure your system is working. The riskier your client base, then the more often the reviews have got to be. It's just plain and simple. And then we just pick up here some of the regulatory findings. You've got to document the findings. Again, there are checklists out there. Some of the material produced by IFAC will help you with that. You've got to share the results. You've got to use the results within the evaluation of partners and staff, and then come up with sensible feedback. Don't fail everybody for the sake of failing everybody. There's firms I know, there's a firm I know, a very good firm, and I said to their compliance partner last year, you're failing too many people. because he'd set the bar so high no one could pass. It was just, what's the point? How do you feel if you go to work every day thinking, my file's failed yet again? No. Also, how do you explain that to the regulator, that you failed everybody? Now, the regulator won't be very impressed either. The regulator might not be impressed everybody gets top mark, so you've got to have a balance. Nobody can all get top marks, nor should everybody in a perfectly good firm be failing. You've got to have a balance. Choose the language. One of the things I've stopped using in my international organisation is just having a grade of adequate. Because what does adequate mean? I'm adequate. Great. No, I'm a chartered accountant and I'm proud to be. I'm not adequate. Horrible. That sort of language. That sort of language. It's motivate people and encourage people, not present an air of almost. You only use language like adequate. It's almost promoting an attitude towards mediocrity. It's a bit like actually in our professional exams in the UK. I mean, we certainly for many years, certainly when Catherine and I were doing the exams, you had grades like marginal pass and pass. And everybody used to go around saying, I want marginal passes because it shows I've done just enough work to get through. Great, Problem was, those are the sort of people who then got mixture of marginal passes and marginal fails, therefore didn't get the pay review and had to come back and pay to resit the exams and all the rest of it. So it's promoting mediocrity, that sort of thing. So there's the IFAC material I mentioned earlier. Very good material indeed. And there's lots of useful practical stuff in the appendices to it. So including guidelines on EQCRs, guidelines on client acceptance, guidelines on consultation, guidelines on monitoring. Good and practical. So we're nearly done. ISO 220 is engagement specific. It's just simply taking ISQC 1, SSQC, and then focusing it on the engagement. And what it's talking about is the responsibility of the engagement partner. As you can guess, is all about engagement leadership, ensuring adherence to standards, ensuring quality is delivered, ensuring ethical standards are delivered, specific references to consultation, but all it is doing is applying ISQC 1 in the context of the individual engagement. That's all that it is about. Now, that's just a useful reminder of really the minimum standard we expect of an engagement partner. The days of the engagement partner being there, breezing in for a meeting with the client, saying how much you're going to build for the manager, and then client, nice to have seen you. Now, shall we talk about this consulting engagement you want to buy from us because it's twice the audit fee? That sort of thing of the days of the past. And there's got to obviously be the evidence, as I've said already, through the partner's involvement on the file, through the time system of the partner's participation in this area. And then obviously we then move on through this, working with the EQCR, and then obviously the satisfaction of the adherence to all the various standards that we've been referring to. So it's all about a leadership role. Now again, no harm, particularly for your longer serving partners, to remind them of the standards. Because yes, this has raised the bar from what we'd expected in years past, in which there really wasn't a document, there wasn't such a minimum standard there as to what was expected of the engagement partner, or that direct, close contact. Certainly when I first became a partner, as recent as 1997, it was much more meeting standards, but within the firm's context, very much meeting commercial requirements. Your own firm will be setting commercial requirements, but we've now got a much, much higher bar within professional standards. The other bit of it is, of course, the EQCR, and we've talked already a lot about that, and all our remaining couple of slides do is just set down for us the duties of the EQCR that we've already referred to, and I've already touched on the regulator's concerns about the timing and the documentation of the EQCR. That's the big concern regulators have. These things being done on time, at the right time, and them being properly documented. And if you get that right with your EQCRs, and if you're involving an outsider, if you're in a sole practice situation, or where there's a sole audit partner, the EQCR can't be the tax partner, by the way, because there's no other audit partner. The tax partner is nothing about audit. If it's an outsider, the same principles apply. So let's bring up another nice picture. Sort of the River Thames is down there somewhere. I think it's turned into an ICW strap line, that sort of thing. So it's a landscape of a city somewhere. Now, obviously, we're very happy to take some questions from you. I think sum up. Shall I do the summing up, Catherine, because I'm wired up? Summing up, what we've been talking about this morning is practical common sense. That's all it is. Linking these standards into your commercial and business objectives. They are not meant to be an impediment to doing good business. They're not meant to hold you back. They're actually there to demonstrate you're a quality business. And for many of you, really for all of you, whether you're a sole practitioner, whether you're a small partnership, whether you're a mid-sized firm, whether you're a larger firm, much of what's required is just simply pulling together work you've already done, probably getting some people to work together in a way that, such as your HR colleagues, in a way they've not worked together before, and then it's over to you to deliver, and all being well, you're a stronger firm, working as a result of it, and all being well, it's helping to add to the credibility and reputation of the environment you're working into. And I think the final words, heard me use the words credibility and reputation. At the IFAC meeting we've been at, the number one concern of the chief executives of the world's 30 or so largest accounting bodies who were surveyed recently, their number one concern is the reputation and credibility of our profession. Its adherence to quality standards helps us stand up to the clients we work with and our other stakeholders to say that we are meeting, that we do have reputation and we do have credibility. So from both of us, representing ICW, thank you for your participation this morning. I think a number of you look like you're all set to depart, so probably rather than taking questions to the floor, the problem we take questions to the floor is it then has problems with the recording, so we can obviously very happily speak to any of you on your way out. So thank you very much for your time today.